Today we are looking at buy-to-let investing, and in particular, what are currently the best areas to invest in the UK. Regular viewers will know that I believe that the two true real wealth building assets are stocks and leveraged physical property, known as buy-to-let in the UK. And these are the only two asset classes that we currently hold and focus on because historically they have both paid a rise in income and have had a rise in capital value over time. Property is a tried and tested approach to get into financial independence and is one of the most common approaches along with index fund investing in the FI community. When looking at what area to invest in, I found that one of the best sources for buy-to-let investing is the reports produced by a property market analytics company called Hometrack. So let's take a look at what the data is showing in their latest edition. House prices. There's no doubt about it, the UK property market is booming at the moment. As you can see, average UK house prices rose at 4.1% in the year to April, up from 2.3% in April last year. This average is being dragged down by London, which has been underperforming for a number of years now and recorded growth of around 1.9%, which tends to be the way the UK market goes. History being our guide, London usually provides the initial strong growth, followed by the south in the first part of the cycle, and then the rest of the country plays catch up before there is a boom, and then another crash, before the cycle starts again, with London leading the growth in the next cycle. Hometrack say prices are being underpinned by demand from buyers continuing to outstrip supply, and price growth is highest in areas where affordability is greatest. When looking more on a regional basis, Wales, the North and the Midlands have shown strong performance. On a city level, Liverpool up 6.9% and Manchester up 6.8% are registering the highest price growth of major cities, which is the 5th consecutive month this has been the case. Anyone who listens to the property podcast by the two Robs will not be surprised by the top 5 areas on this list, which are Liverpool, Manchester, Nottingham, Leeds and Sheffield, which are all registering over 5% year-on-year growth. Liverpool and Manchester are often talked about, and from what I hear it is a very competitive market with lots of competition between investors. And it's for this reason that I wouldn't look to get involved in these markets at the moment, especially if you've not got a huge cash pile or you're not experienced in investing in property. There's a huge amount of new build developments going up in these areas, and it's easy to head there from London and think you're getting a great price, but you're actually probably overpaying from what the local investors would pay. I feel Nottingham goes under the radar surprisingly, as it's a vibrant city and is easy to get to from London. I'm very excited by the growth prospects of Nottingham, which is a city getting a serious amount of investment at the moment and has all the fundamentals such as 2 big universities, leading hospitals, some big business HQs in the area, great transport links and the proposed East Midlands HS2 hub in Totton, which is just outside Nottingham as well, although that's some good years into the future. Rental market. Hometrack also produced a quarterly rental market report. As you can see, the London rental market has been hit pretty hard recently, but across the UK outside London, there is strong rental demand amid constrained supply and rents are up by around 3% on the year. Furthermore, rental growth has hit 10-year highs in Q1 2021 in the North East, South West and East Midlands and Wales. As you can see from the areas with the fastest growing average rents, Newcastle is top and both Sheffield and Nottingham, mentioned earlier, are up there as well. I feel that Newcastle provides an interesting proposition at the moment as it's another vibrant city and hasn't really seen a huge amount of growth since the last crash, so may well still have some room for strong growth over the coming years. But for me personally, it's a very long drive which makes it very difficult to view properties, which puts me off. So there we have it. Strong growth in both capital value and rents in Sheffield, Nottingham and Liverpool are definitely getting my attention. Personally, I will definitely continue to focus on Nottingham as it's an area I know well, but I would also be interested in having a look at Sheffield at some point as well. The market is definitely heating up at the moment, and it's a seller's market in the top growing cities in the UK, and it looks like we are starting to enter the boom period of the property cycle. So that means it's important not to get sucked into the fear of missing out and overpaying for a property in the winner's curse, so it's always a period to be cautious. But even if the worst happens, property has been a very forgiving asset, and as long as you're approaching things with a long-term time frame, then things tend to even themselves out over time. So there we have it. Hopefully this provides some food for thought, and I would love to know anyone's thoughts on the property market at the moment and any opportunities that they have been seeing both in the UK and further afield around the world. As always, thanks for watching and I'll see you next time.